Hello everyone. Today we're going to analyze Bitcoin, and I have to say that today Trump has ended yet another war that he himself started. Trump and his inner circle made good money on this because according to information in the media, right before his announcement, someone shorted oil for a huge amount, about $1 billion. Well, Trump may seem like a fool, but in reality he makes a lot of money off his so-called eccentricity. Now let's take a look at the Bitcoin chart. And what do we see? It also reacted positively to Trump's words by going up, and yesterday's candle closed as a big green candle. But there's a catch. Notice that even though this candle went above $72,000 and is now trading above $71,000, it closed exactly below the level of $72,078. This level originates from way back in 2024. Here I've marked it. It's from March 11th, 2024, and we couldn't break through it for a long time. And when we finally broke through, well, Bitcoin went on to reach some new highs. And now this level is also a key one. And notice that today we even slightly surpassed yesterday's high. Let me zoom in like this. It'll be easier to see. We updated it a little bit by less than $100, and the current daily candle risks closing with a red body, which carries the risk of a decline either to the lower boundary of the channel, around $66,500, or even to the lower boundary of the range, which is around $60,000, or at the very least, let's mark this level. Here we had the lowest close, which is around 64,000. This is quite possible, and I wouldn't rush to go long or buy Bitcoin right now, because until we see a breakout above $72,078, it's premature to talk about continued growth. At the end of this video, I'll show you that the risks of a decline outweigh the risks of continued growth. But if growth does occur, then the next technical target is $76,300. This is the lowest daily candle close from April 8th, 2025. So essentially exactly 1 year ago. We might test this level. Notice that everything that happened during the following year was above this level. And since we've broken through it, we might test it again, although we approached it on March 17th, when the maximum was exactly $76,300. We didn't quite reach that level. So essentially, it has already been tested. Now we remove all the markings and look at the monthly candles. On the monthly candles, we see the following situation. We had 5 months of decline starting from October. 1, 2, 3, 4, 5. In March, we had a slight increase, which was mostly sold off, and this candle is more a candle of uncertainty than a candle of growth. We can't talk about any kind of global trend reversal until we engulf the February candle. To do this, we need to close above $78,750. Can we update March's high in April? Yes, of course. We can go to the base of that same February candle, around $78,000, but that won't mean any trend reversal. Globally, the trend is downward and is looking toward the 50-month moving average. That's $58,000, and potentially even the 100-month average, which is below 40. But it's too early to talk about that for now. But seeing 58 to 59 is very likely. The only question is, by what path will we get there? Let's look at the weekly candles. On the weekly candles, the situation is flat. That is, despite the fact that last week engulfed the week before, all of this is still happening within a sideways range. In order to talk about a full reversal on the weekly candles, we need to engulf this red week, where the cursor is, from March 16th, and for that, Bitcoin needs to close above $72,816 on the weekly time frame. Then yes, our target becomes the weekly average of $87,800 and potentially even the 50-week average around $97,000. But for now, these are just pipe dreams, nothing more. Could this happen? Yes, it could, but it's too early to talk about it. It is more likely that we will see a continued decline towards the 200-week average. That's $59,500, and even the 300-week average. That's $52,500. And now, what I promised to do at the end. We open TradingView, and here are my personal indicators, which I created and designed myself. And here we pay attention to the 3 charts at the bottom. Here, from left to right. First, we have the 4-hour candles for Bitcoin. The lowest indicator shows overbought and oversold conditions. That's the red line. Notice that it is in the upper half of its range. This indicates moderate overbought conditions on the 4-hour candles. Also, right here on the main chart, there are many indicators, red, orange, pink, that signal a risk zone for a potential decline. That is, this decline could, for example, reach the 200 period moving average around 69,340, or at least drop into the gray untraded zone, which is around $70,000. 12-hour candles. Notice that the lowest indicator, the red line, is in the zone of strong overbought conditions. This indicates that here too the chances of a downward move, at least to the area of the gray zone, the same $70,000, or even to the 50 period moving average at $69,500, outweigh the prospects for Bitcoin's growth. Daily candles. Here there is moderate overbought according to the lowest indicator. And again, we haven't broken through the $72,000 level as I mentioned earlier. So here too the risks of a decline are quite high. Now, if we switch to similar charts for the S&P 500 index, we'll see the lowest indicator. On the daily candles, there is strong overbought. On the 12-hour candles, there is extreme overbought. On the 4-hour candles, there is strong overbought as well, and also many signals indicating a potential decline. And thus, Bitcoin is under pressure not only from its own indicators and, so to speak, its own structures on the higher time frame candles, but also from the stock market, which at any moment could go down. Because even though Trump won another round of the war just a few hours later, mutual missile exchanges started up again. There, Israel shelled Lebanon, Iran shelled either Israel or someone else. So the situation is far from straightforward, and from my point of view, right now things for Bitcoin are looking more bearish. And finally, I want to remind you that we did this review on the QuantFury platform. I chose it for my own trading and can recommend it to you. Here you trade absolutely without any commissions or fees. And on top of that, you can trade not only cryptocurrencies, but also stock market shares, commodities, gold, oil, gas, platinum, and various metals. You can trade ETF funds, the Forex market, and again, all without commissions. You can follow the link directly or via the QR code. And with that, I say goodbye until the next review. Goodbye.